Hello everyone, this is Przemysław Radomski CFA talking to you on the final day of January. And in today's video I'd like to emphasize that gold is finally declining in a substantial manner in today's pre-market trading. And the major thing about this decline is that it means a move back below gold's 2011 high. Therefore, gold just invalidated the major breakout that it's been attempting to, confirm yet another time. And it failed yet another time. So it is not the breakout, the attempt itself that matters. It is the invalidation that matters. The previous invalidations resulted in substantial declines, and this time it's no different. It's likely that we're going to see a major decline in the following weeks and probably months, probably also days. But as always, the very short-term price fluctuations are not as clear. Silver declined visibly as well. However, it failed to move above $24 level for many days in a row, moving back and forth around that level. So it's not as much of a deal as gold's invalidation. Gold mining stocks, particularly junior miners, and the GDXJ ETF declined heavily in today's London trading. And it comes after a series of daily declines. Right now, junior miners are well below their mid-January low, even on an intraday basis. And very interestingly, junior miners erased a large part of the monthly gains. In fact, right now we can see that it is not even the first two daily gains that remain in the price. The current price level is below the daily closing price after two daily rallies that we saw earlier this year. What does this mean? Well, it means that unless we see some major rally today, and it's unlikely that we're going to see it, the entire performance of junior miners is going to create a major monthly reversal. Because, that's the starting price. If it ends here, we would see this kind of candlestick, at least from the GDX J perspective, as it's trading in London. This is from here, because that's just intraday move. So I didn't draw it perfectly. But nonetheless, we would see a major monthly reversal, and therefore the implications would be very bearish for the following months. How bearish? This chart features the GDXJ from the regular US dollar perspective, based on trading on the New York Stock Exchange. And after the previous similar top, the one that we saw in the first half of the previous year, junior miners declined substantially. And it took just a few weeks for them to slide well below their previous low. Will we see something similar? That's quite possible. In this case, the short-term rally was bigger, which means that the post-rally decline could be also bigger, analogous to the one that ended in May. This one could end in February or March. And we could indeed see a move below the 2022 low. But what I would like to emphasize, based on this chart and the previous price performance of the GDXJ, is that even if the next downswing is not bigger than what we saw, it's just equal, then the declines are still likely to be truly profound. I marked the previous declines with golden or orange dashed lines, and I copied them to the current situation. As you can see, the downside targets, based on just history being repeated, are much below the recent lows. And why am I emphasizing that? Because based on the analogy to 2012 2012 and the subsequent decline, or base analogy to 2008, the final part of the slide is likely to be even bigger than what we saw previously. Consequently, these declines, based on those dashed lines, even though they are so significant, could actually be the conservative side of the estimate. So yes, it can really happen that miners decline as low in the following months. Here's another good reason for it: the situation in the US dollar index. I've been discussing this for many weeks, explaining that what happened in the US dollar index in the last couple of months is normal, as it's normal for any market to correct half of the preceding rally before it moves up again. And in this case, the US dollar index corrected a bit more than half of the rally, and it appears to have bottomed close to its mid-2022 low. Yesterday it closed the day above the 50% retracement, so the small breakdown was invalidated, and today US dollar index is moving higher once again. It's not a substantial rally, but still it's a rally after the invalidation of the breakdown. So this is a powerful bullish indication. It suggests that the corrective downswing could indeed be over. The action in gold, invalidation of the 2011 high, very important sell signal, and the price action in gold stocks, they all point to the same outlook for the precious metals sector, which is bearish for the following weeks and months. In my opinion, gains on the short positions are likely to be huge before the decline is over. Of course, I can't guarantee any kind of performance, but all trading and investment is risky, and whatever I'm saying is just my opinion only, not investment advice. But still, I do think personally that this coming slide is going to be a very profitable one, if you are positioned correctly to take advantage of it, of course. All right, that's it for today. Thank you. Have a great rest of the week. Thanks again. Bye-bye.